When you see some type of, there are some events, there are some information, there are some signs, there are some facts you cannot just ignore when it comes to what is about to come. Literally, if I need to make a similarity with the weather, when you see dark clouds, all right? When you see dark clouds, you know that the rain might be next. Now, it doesn't necessarily mean that it's going to rain automatically, but you know that there are 90% chances that you might see rain. When you see lightning, when it starts to get cold, when you get to the months where winter is supposed to come, you know that winter is coming. And that's a great segue because winter is definitely on the way for the short sellers, not only in AMC stock, but in the entire market, because they are actually shitting into their pants, thinking that if the US regulators continue to do what they're supposed to do when it comes to reforming the security lending program activity, then we might see what we saw back in January last year and in June of last year when it comes to GameStop and AMC. Look, this is coming from the Financial Times itself. Hedge fund managers fear the painful losses they suffered in the meme stock trading frenzy of January 2021 might be repeated if US regulators press ahead with reforms to securities lending, one of the most opaque practices in financial markets. One of the most opaque practices. Yes, look, from Unusual Whales, really trustworthy account on Twitter. Hedge funds oppose SEC's reform plans after the GameStop debacle. The head of regulatory affairs at the Managed Funds Association, the trade body that represents hedge funds, said to the SEC that proposals were misguided and could lead to situations similar to GameStop market event. Let me pause here for a second and kind of put things in perspective when it comes to what is actually happening here. All right. So here's the deal, folks. When you see a stock like AMC, all right, yesterday it was down, 10% or 8%? I can't even remember because I'm numb to the price action, all right? But when you look at the last month, it dropped 38%. The last month, meaning the last 4 weeks. In the last 6 months, 57%. In this week only, almost 21%. Tell me how this it's even possible, how this even makes sense for a company that just released NFTs to a bunch of stockholders. Tell me how this is makes sense to a company that's a future even brighter than prior to the pandemic, based on everything the CEO, the management is doing, plus people going back to theaters and tons of people, millions of people owning the stock and keep buying. How is that even possible? It doesn't make sense. But you know what will help understand what makes sense? Short selling. But in order to short sell a stock, you need to borrow those shares from somebody that's actually holding the shares. If you want to short AMC, if you want to short the stock, if I hold that stock, you will need to go to a specific brokerage in order for them to locate the shares, and they will be able to lend you my shares so that you can short sell the stock. That's how it works. Look, securities lending. Securities lending, let me highlight this for you, is the practice of loaning shares of stock, commodities or derivative or other securities to other investors or firms. Securities lending requires the borrower to put up a collateral, whether cash, other securities, or a letter of credit. What is important when it comes to short selling? Because securities lending provides liquidity to markets and can generate additional interest income for the long-term holders, of course, because they have to pay a fee, but also allows short selling. This is the most important part. Allows short selling, because without securities lending, there is no short selling. But on top of that, when you look at how lucrative this business is, just in 2021, securities lending markets up 21% in 2021, generating $9.3 billion in revenue. $9.3 billion in revenue. So this is the whole bottom line on why these guys don't want the SEC to change the security lending process, because first of all, it's how they use it by creating some other synthetics on top of it, building fake shares, phantom shares that will then be used to short company stocks to oblivion. All right. But on top of that, it gets even more juicier, because when you look at what the market has been doing lately, this is the Dow Jones. Look, since the last 3 to 4 weeks, 2 weeks, it is down almost 5%. But when you look to the NASDAQ, which is the index when we have a bunch of stocks held by the short sellers, look, on the last month also, you can see from the highs, we're down almost 10%. This is this close to what we call a correction. So they are so afraid. They are panicking so much to what it's coming when it comes to interest rates, because nobody knows exactly how much interest rates hikes we're going to have. Nobody knows what the Fed is going to do when it comes to how many times interest are going to increase in order to fight inflation. Omicron and COVID is not a risk anymore. It doesn't impact or move the markets anymore, because people are shifting now to inflation. And when interest rates go up, the short selling business tend to be a little bit more risky. Well, not a little bit, highly risky. Why? Because if you had to pay 0.01% on the borrow shares that you needed to short a stock, with interest rate increasing, if you're talking about 4 times, and I heard a firm on the street calling for 8 times interest rates hike. That means it's going to be pretty expensive for a short seller to do security lending, ultimately to short a stock. And that's why I think before things get into implementation, they want to break it as much as possible, using also the option chain, especially when it comes to what is coming on January 21st. But you get the point, right? You get the point. It's not a coincidence. It's not a coincidence if securities lending gets canceled or reformed or regulated that we might see the price of stocks like AMC shoot up to the roof. But by doing so, it's even more dangerous, because by shooting up to the roof, we might see what we saw here at the 72, but go even higher, because everybody is looking for some places to make money, when what used to make money in 2021 is not the case anymore. So this has the potential to get them out of business, as we saw in 2021 with 450 hedge funds closing doors and returning the money for some of them. It's just a matter of time, folks. Don't care about what you see here on this share price action, because it doesn't reflect the reality. And here is the reality. When you know how to read in between the lines, here it is. This is the reality we need to focus on when it comes to what it's coming for AMC. All right.